we help people defer the tax, not using a 1031, but then go into passive real estate investments. For example, we just had a $13 million car wash exit, and they're developers. And so it's mostly a business sale. It was also real estate. And we did another $7 million business in Colorado, a deal there. And so we help people defer the tax, not using a 1031, but then go into passive real estate investments. And the cool thing about it too, is we can help them reset a depreciation schedule the way that we structure the deal after they carry a note, that's why I was asking about the 0%. Instead of carrying for you, which is great, you got a good deal. Maybe you paid a little bit more, a little bit less. Maybe you could have got a little bit less. But what we structure is on the sale, the seller sells it to a trust and the trust sells it to you, and they carry paper for the trust. And they get to earn somewhere between 6, 7, 8, and 9%, all tax deferred. But even more than that, they can put it into liquid investments, and they can put it into illiquid investments, and they can have, they have no timing restrictions, right? And so part of that, back to that car wash exit, they did not want a 1031 because A, they're developers, but even B, they go, this market's crazy. Like, we were sold it for 10 and we sold it for 13. And so we like to teach is buying, selling high and buying low, right? Not selling high and doing a shotgun wedding in 180 days and overpaying for a property and with bad debt. Which is part of what we're seeing right now. Because the challenge is the seller who says, hey, I want to sell at a 3.5 cap, because he's looking at two options. One, paying massive tax, which is likely for a lot of people who've owned for a long time, or especially if you're buying value add and mom and pops, right? Or B, selling and doing a 1031 and having to get a higher interest rate with valuations. And so they basically it's a standstill. They go, who's going to call our bluff? They're like, I'm either going to hold forever or I'm going to pay massive tax. And this is where we come in and we think it's a great solution. So I'm curious what you think about this. We say, hey, have your cake and eat it too. Sell at a high price, pay off all your debt. You don't have to go back into more debt and more property and more toilets and trash and liability. In fact, we had Warren and Catherine, a client of ours. I helped them sell a $2.5 million building in Sacramento. I'm also a real estate broker, started at Marcus and Millichap, do multifamily investments. And we helped them exit, and they had a $120,000 NOI. And instead, now they have like $190,000 in cash flow. They got to defer their tax. They got to diversify. They went into multiple passive real estate deals in places that are not like Taxifornia. A lot of them are highly overpriced. And going into places that are value add, 400 units as a passive investor, 200 units in Texas, 400 units in New Jersey, actually near Princeton, which I wasn't sure if I was going to go there. So